Inflation.
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 Inflation is everywhere. I don't care if it's 5.9, 6.1, 6.5, 5.5. It doesn't matter. It's still high.
I want to start by talking about the inflation numbers that were released earlier today. We got the April CPI that came out, and they've been talking about this number all week, right? Everybody is waiting on pins and needles for this government report card on inflation. And as I've said many, many times, you don't want your kids to grade their own report card. That's why you don't want the government coming up with the inflation numbers, because it really is a report on the economy, and the government is fudging the numbers. And of course, the government doesn't have to cheat. They don't have to lie. The CPI does that for them. It's not like the CPI comes out with a high number and then they lie about it and they report a lower number. They don't have to do that. The way the CPI was engineered, it was designed to come out with a low number. So they don't have to cheat. The CPI does that all by itself because they already rigged it when they fixed it in the early 1990s with the Boskin Commission, and they've tweaked it since the initial fix to rig it even more. But anyway, be that as it may, the markets still pay attention to this number because the Fed pays attention to this number, and everybody wants to figure out what the Fed's going to do, and so they look at the numbers that the Fed claims it pays attention to, and of course, the media pays attention to the CPI as well. And so the markets were looking for the CPI. And everybody is looking for some indication that inflation is coming down, despite the fact that all the evidence is that it's not, even though it is not as high as it once was. At one point, we were looking at 9% year over year, and now we're just looking at 5%. But 5% is still a high number. 5% is way above the 2% target. And for those of you who don't recall, when Nixon imposed wage and price controls back in the 1970s, the initial controls went in when inflation was above 4%. They didn't wait for it to be, double digit. It was 4% when they were panicking. Well, we're well above that now. So to say that 5% represents some type of success because it's not 9%, is completely wrong. Even if you forget about the fact that if the government says 5%, it's actually 10%. 5% is bad enough, even if it was only that bad. And it's nowhere near the 2% target. But in any event, the markets are just looking for this number because what they're hoping is that the Fed will pause officially or start cutting rates because they can declare victory in their war against inflation. So the expectation was for a 0.4% increase in prices in April. Now, that's against a 0.1% increase in March. So if the Fed were making progress, why would that number be going up? And in fact, a 0.4% increase in a single month, that's a big jump. That's nothing to brag about. Annualize that. That's a high number. Anyway, the number came out exactly as expected, 0.4. However, the good news that the markets initially seized on was that the year-over-year number, which was expected to be 5.0, came out at 4.9. Now, to me, there's probably a rounding error in there. I don't even think there's a difference between 5 and 4.9, but now there's no 5 handle. All of a sudden, they're saying, hey, we got a 4 handle on the CPI, and the markets like this. Oh, yes, we're making progress. We're at 4.9. That was the only bit of good news in this report because everything else was exactly as expected. The core ex food and energy was up 0.4. Again, taken on its own, that's still a big number, when you multiply it by 12 to annualize it. And year over year core was 5.5. That was what they expected. Now, it was slightly better than the 5.6 from the prior month, but that hardly indicates that the Fed is any closer to 2%. The initial reaction to what was perceived as better than expected inflation news, meaning lower number, gold rallied. Again, why? Gold is an inflation hedge. So gold should rally when inflation is higher than expected, not lower. But in the perverse world that we live in, everybody is focusing on the Fed. Lower inflation means the Fed can cut rates sooner, and that's perceived as being good for gold. Higher inflation means they can't cut rates, and that's supposed to be bad for gold. The reality is high inflation is better for gold because gold is an inflation hedge. And what high inflation shows you is not that the Fed is going to have to fight harder to win. It shows you that the Fed is losing the fight against inflation, and that is bullish for gold. So traders still have this whole thing wrong. That's why whenever you see a sell-off in the price of gold on hotter than expected inflation numbers, you want to buy into that dip. But anyway, when this number came out, the markets were initially excited. As soon as we got that 4.9 handle or 4 handle, the S&P jumped, the Dow futures were up better than 200, gold rose $10, $12 an ounce. You know, Bitcoin jumped too. Everything was up. Everybody was excited, and bonds rose. Yields fell down because the knee-jerk reaction was, oh, this is good. Now, of course, from my perspective, it isn't good because it doesn't prove anything. This wasn't a meaningful improvement in the numbers. And I think after the investors had a little bit more time to think about it, they kind of came around to potentially that position, and then the market sold off. The Dow was down 200 points at one point early in the morning, so it lost those gains. But by the end of the day, the Dow was down only slightly, but the NASDAQ was up better than 1%. Tech stocks surged, 1%, but that's still a big move. The S&P was up about 0.5%. So the markets concluded that this is good news because it means that the Fed is going to be able to start cutting rates sooner because they're winning the battle on inflation. Well, again, the reality is the numbers show that the Fed is losing, but not just these numbers. All the numbers I went over on my last podcast that have nothing to do with the CPI, but all prove that inflation is entrenched, that it is not going away. It's not getting anywhere near 2%, and nothing that the Fed has done thus far is going to bend this curve. That inflation is here, it's going to get worse, and it's not just in the United States. This is a global problem because central banks all around the world have made the same mistake, and they have enabled governments to profligately spend money. And as a result of all this extra spending and all this money printing and all this easy credit, the world is dealing with an inflation